Oh,
Welcome to the Eagle City Multifamily Show, where we talk all things apartments and real estate investing. And today we have an amazing guest who I'll introduce in just a moment. But before we do that, I just want everyone to know that this is not legal or financial advice. It's simply professionals sharing what we do in the real estate investing space. And so today on January 15, 2024, look at the time pass. We have an amazing guest here today who will be talking about the analytics and things that go into the due diligence that goes into real estate investing, especially before we purchase specific properties. And it's a very important thing, especially with the shifting real estate markets that we're seeing, right? With the bank rates going up and down, and everything that is shifting in our market today. And without further ado, I will introduce our amazing guest speaker, Albert Chen. Albert, would you go ahead and tell us a little about your background and how you got started and kick it off?
yeah, sure. Okay. And thanks, Herb, for the invite and intro. By the way, everybody can hear me clearly, right? Cool. Okay,
Yeah.
cool. Yeah, yeah. I'll give a bit about my intro, but before I give my intro, first I want to hear like if anyone heard about big data, this kind of terminology before, even you heard of, you can type in the chat box. Anyone heard of a big data, if this word before? Yep. Okay. Okay. I have my wife typing yes. Okay, of course. Whatever. So yeah, big data is a very hot topic nowadays everywhere. Okay, thanks. Okay. Thanks, Herb. um, every industry using the big data. So let me share my screen, then I could start my topic, and then let me and then I can share my topic and then work through it. Let me share my screen. All right. So this is the topic I'm gonna go through about big data and analytics. First, I'm gonna introduce myself a little bit. So my name is Xiaoqiang Chen. My first name is kind of hard to pronounce for a lot of Americans, so I go by Albert every day. I live in Tampa, Florida. I have been a data scientist for almost 15 years and applied my data and analytics skills for financial industry for a while, yeah, many years. I help companies, those financial companies use predictive analytics to grow business, improve profit, customer experience, etc. A lot of things. I'm also a real estate investor and Florida licensed realtor. I plug in my data and analytic skills in real estate investment, analyzing market, analyzing deal, predicting trends, etc. A lot of things. This kind of thing not only help my own investment, but also help my clients to find the deal, find the ideal properties from a realtor perspective. And I have a channel, YouTube channel talking about called Show Showing, and the channel is talking about real estate data and analytics. And this channel across several platform, YouTube, WeChat, and the Little Red Book. The latter two are Chinese platform. And similar to her, I'm also a Brett Summer's personal mentoring student in the apartment investment world. I have investing a deal yesterday, last year. So like an LP deal, 124 unit. So here is what I'm going to talk about. Hopefully, I can cover under an hour. But first, for any kind of things, I'm going to talk about why big data and analytics, and then I'm gonna um, show you what aspect in data and analytics can help in real estate investment, and I will also show you illustrate some examples to help you make sense of this kind of things. Um, and I can also show you what the public data source tools and analytics tools that you can access easily without subscribing to the very expensive CoStar report. Those free tools can help you make informed decisions. So I will give and I'm gonna pause a little bit probably during in between, and I will give save some time for Q&A at the end as well. Oh, okay, let's get into the meat. But first, why? Okay, why data and analytics? I believe a lot of people have heard this saying before. In God we trust. Everything else bring data. So this is a very famous quote, right? So why? Because data is evidence. It can bring informed decisions. And through analytics, we can have educated guess. Thus, the decision we will make, we will have more accountability. Think about this analogy. You have food. You have a pork, chicken, beef. You have vegetable, this kind of raw food materials. But in order to make it in a very delicious entree, you got to have some way approaches to cook them really good to make a really good meal, right? So the raw food and materials is like data out there everywhere and in any kind of form structures. But the way you cook the data, the way you cook the raw food, sorry, is like analytics. Analytics is the way to cook the food, which make the data useful and summarized inside, find the really important information to help you make decision. So and nowadays, every companies in every industry relies on data to help generate more insight to help business in various perspectives. For example, I can give you some. In insurance industry, for example, life insurance, it can help identify ways to find the subset of a population to target, to promote, to send those ads. And then they find people more likely to respond and apply the insurance and then yield more sales and profit. And also they can find opportunities to save cost and find ways to control risk and loss in banks, for example, the credit card industry. And in lots of situations, a very important application of analytics is prediction and forecasting. For example, in a call center, the staffing department needs to forecast the call volume for future weeks and months so that they can plan out, okay, the appropriate number of a staff that they need to allocate for the call center so that they don't waste too much money having those staff sitting by and not receiving any call, or not have enough staff to receive the calls, then customer waiting for a long time. So this is very important usage, predictive analytics. And tons of areas need data and analytics to help make good decisions. So you see, this is a lot of whys for everywhere. But what about in real estate investment? Okay, basically, data and analytics can also help many perspectives. For example, as a real estate investor, no matter you or myself, to determine if you want to get into some market, before you do that, you need to understand the market profile data regarding demographics, housing and rental demand and supply, and rent growth, rent to price ratio, which is very important for a lot of a smaller property deal investors, job growth, etc. A lot of things, a lot of perspectives, which we call it, this kind of thing is a market analysis. You need data. And also to real analyze a deal, like in the underwriting process, you also need to project income and expense. The for performa for year two, year three, five, or 3, 4, 5, 6, things like that. and which needs certain perspective, predictive analytics. So this is very important. A lot of summer student and then the multifamily investors know that okay, in the spreadsheet model, you got to plug in those data. But actually, this need prediction. And for asset management, you need to monitoring for the important financial metrics, in which the statistical process control will play a big role. You're gonna monitor the statistics, those KPI, those metrics, the trend pattern, make sure they don't go out of bound. You set up, or they don't shows like a pattern that go into worse and worse direction. You don't want that. So statistical monitoring in this place. Um, so data analytics will always stand out to play some roles along the way in real estate investment. And in later part of the seminar, I'm going to show you an example about how this data analytics can works. But before we do that, let's have some fun. Okay, let's do a pop quiz. Here, let me first work through the question of the pop quiz so that everyone can have some fun. Among the following cities, which city have the largest average year-over-year rent growth percent change during normal times? The normal times are defined as a pre-COVID period since 2015. And this question is asking, on average, in the past previous time, like normal times, which city have the like highest rent growth year over year in terms of percent change? So, and Herb gonna pop up the pop quiz. I yeah,
Yeah, it
I
should be up now.
think
Can you see it?
uh yeah, I can see the pop quiz. Let me see. Let me see. Make sure it's the correct. I think this is a pop quiz too. You got a pop quiz one.
Oh, I'm sorry. We will bring one up in. Let's start over. Let's do pop quiz 1. Okay, pop quiz 1 is launched.
Yeah, launched. Everyone can and select and have a guess. And we can give you some like let's say just a minute. So make a guess.
Can everyone see the pop quiz?
Everyone can see the pop quiz.
Among the following cities, which city has the largest average year-over-year rent growth percent during normal times pre-COVID?
Yeah, pre-COVID. Yeah.
Anyone has any questions, post it in the chat. And in just a moment, I will end the poll and show the results.
All right. So if you already typing, just if you already enter your answer and submit it, type in the chat box. I'm done. Okay. Oh, okay.
Can you
Okay.
see
Let me
the
see. This is gonna
results?
be interesting. All right. Um, Texas. Okay. Majority of the people. I feel that probably a lot of people coming from Texas, Dallas, and some selected Jacksonville. Okay, this is not surprise because Jacksonville during COVID. People know that Jacksonville during COVID increased a whole lot. Lakeland, and some people may know that. All right, same P. Actually, I kind of cheated because I can I can select at least one of them is selected by me, the same P. But okay, let me show you the answer. All right, here's the answer. There are some fun things going on here. Um, the one showing the on average pre-COVID highest year-over-year percent rent growth is St. Petersburg in Florida. It's kind of a surprise, right? Because St. Peter housing price is kind of expensive, but But from the data, it is what it is. But you might be surprised to see that there's some others. There are like other city also followed by. Is one is Lakeland, Florida, and another one is Ocala. These two like emerging market, um, rapidly developed and economic fast growth city among the top list, top cluster across the state, across the United States. And some other like cities like Dallas, it's good too, like 4.6. Like, come on, it's no kidding. 4.6% year over year rent growth. This is not small. And actually, all of these cities on this list, you see this have actually is not a small rent growth year over year prior even COVID. And in COVID pandemic period, the Sun Belt state, they all coming falling to the Sun Belt state. All of these places have even a huge rent bump. But before that, they are not bad either. And those cities are the city I'm staring at, I'm interested, and also some of my friends looking at. That's why I'm pulling this city to have you do this kind of pop quiz. But it's not like across the whole country. Across the whole country, the answer may be a different story. But the thing is, okay, you have some fun with this pop quiz, then you might guess how I get this answer. Is this information out there somewhere that I can easily access, or do I have to pay for an expensive CoStar report to get this information? The short answer is, yeah, there's something out there. You can find this information, or you can derive this information. And those information are public data sources. You can find it. For but for this specific one, and I analyze across the country for the whole U.S. country, um, and I summarize the specific city level rent or rent growth into Excel. I have and I save it into Excel file, and anyone interested can reach out to me. I can send it to you later before the end of this seminar. I'm gonna share my contact information, and if you're interested, you can reach out to me. But here, what I'm gonna show you is really, really, I feel is really good information, the great sources of information you would like to see moving forward. The public sources, the open source of data to the public data source I can access. Um, then you can analyze, you can help you form your educated guess, informed decision for any of the deal, any of the market you're gonna analyze moving forward. So, but first of all, there's a magic things called Google nowadays. First and foremost, you don't want to omit Google for any type of data that pop ups in your mind. If any you want to search something, put it into Google first, and the most likely Google gonna pop out give you something, even may not be fully meeting your needs, but can give you a great starting point. And the second important thing I really like is the Census Bureau. It has population data of any kind of granularity, which is by county, by different age band, and by different city, things like that. Census Bureau have the kind of a folder. And among those major listing, the real estate listing platform, residential listing platform, Realtors.com, Zillow, Apartment List, Redfin. You don't want to miss any of this major listing platform either. Their data set is really powerful. They have a great granular, detailed marketing data back to many, many years ago. And those data can help you really understand about those market supply and how the market pattern for sales and rental looks like. For the neighborhood, you want to check the crime rate.org and neighborhood scale. These two sites give you really great color coding, detailed color coding information for crime rate of very specific little area, even down to a small community, and also shows some economic around this neighborhood. I love this. One other things, MLS. This is okay. If you're not a realtor, you probably don't have access to local MLS, but you can leverage your realtor, your real estate agent to access that. MLS is important because it can pull the full transaction record. That is the deal, the property that have been closed and what the close with what the price for close and what the price has been leased for rental. This kind of the things really happen very accurate. So you don't want to miss that. And there are some other probably more techy, platform like what we call as APIs. I like, for example, this one, Realty Mode. I like it a lot because it gives zip code level rental marketing supply data and rent data, in particular by number of beds, very granular. This it can tell you, okay, for each size of the type of size of property, how it the market, the rental supply and the rent looks like by across the timeline. So I feel for every deal I analyze, I use it. I like to use it, and it can help me make better decision. But this kind of data, more techy, so you need some more like a programming skill. So next, okay, now I show you some public data sources. I'm gonna show you an example. Actually, I'm gonna show you two examples. One, let's get the simplest first. Have a first is about um, rent data from public sources and rent growth. Um, Here, so I'm gonna show you the Florida example, because essentially Tampa, around the Tampa Bay example. Because I'm always like hunting a lot of deal around my area, so this I have already have a lot of deal analyzed. I'm gonna show you this one. Um, why this rental data is important? Because it's gonna help me on for every piece of underwriting, every deal I underwrite. For example, I pull this rent growth data from two sources. One is Zillow and two is apartmentlist.com. I thought them for many years since like pre-COVID to like essentially now, close to now. It's like close to the end of 2023. The top one is from apartmentlist.com is the rent growth year-over-year change. And then I plot into charts so that I can visualize it. And then I can see, okay, how this rent growth pattern looks like. And the second one is from Zillow.com. The Zillow data center, it shows this, the single and small multifamily together as rent growth is rent. And I calculate the growth year-over-year change. So one is probably strictly for apartment. One is for more single and multifamily because I look at both kind of a deal, multifamily and single. Um, but if you look at this pattern, you're gonna see they have some similarities. It's really similar, and we can actually categorize the rent growth into three time period. One is pre-COVID, is like from like 2015 or to 2019, and then pandemic period, like 2020 through 2022, something like that. And then you see pre-COVID period, there is like a kind of a stable around maybe 4 to 5% rent growth for apartment and like that, and probably around 6% for single and small multifamily, kind of stable. And then during the COVID pandemic, it shows a really hype up, rapidly growth. This I believe everybody knows that during the pandemic, the housing price skyrocket and then rent skyrocket. The Fed do some criminal stuff and then they print a lot of money, right? And then asset price get inflated, everything's up, and then this having this ramp up. And after the pandemic, there are probably some too much supply and a lot of things going. The Fed increase the rent, so the rent increase the rate, sorry, increase the rate skyrocket, and then the rent, the pricing started adjusted, and then it goes down. In particular, for example, the apartment that on the top chart, you can see that even goes to negative rent, ne year-over-year growth. So by seeing this, okay, can anyone tell me your feeling? What would you project for moving 1 year, for example, 2024, and then sometime if even through early part of 2025? What do you feel you're gonna be the rent growth for apartment? Anyone can type in the chat box about your feeling.
Go ahead, type your answers in
Yeah.
the chat
Or
box.
you can unmute yourself. Yeah, you can talk. Yeah. What
There
you gonna feel by seeing this for this? Now they're doing adjustment. Do you feel like, oh, maybe I can ask this question. Do you feel that the rent growth for Tampa area gonna be like for next year gonna be like normal 4%, 5%, or do you feel maybe more realistic for maybe 0% flatten out for a bit? Like which direction probably you feel more realistic?
anyone feel free to unmute yourself and
Yeah, you can. Yeah,
I
we
think
can
I think
inter.
the next 2 years, this is Asif Khamar. I think for next year and a half, there is not an opportunity to increase the rent.
Yeah,
You need
yeah,
you need to probably the main thing is to maintain occupancy. That is your
yeah,
blood, the blood life. So you can do whatever to maintain the occupancy and keep whatever rent is there. Do not hit the tenant pocket anymore to sustain in this crucial time period.
thank you,
yeah.
Aussie.
Thank you. Thank you, Asif. Yeah, this is exactly my feeling as well. And then actually a lot of investors feeling. Okay, then let's transition to a real deal. I and my partner and I have analyzed and have been underwriting this last year. What happened? And yeah, these things going on. And then the rate have been hiked for so crazily. And then the supply have been sort of skyrocket and look for then the rent pattern, the rent growth pattern is like okay, it's already negative year-over-year change. Then it will not be realistic to have another 4 or 5% just for pro forma and maybe even year two. Then with this, I'm gonna show you. This is a deal, 56 unit deal in South Tampa, which is like a high demand area in Tampa Bay. And it's like a A minus or B plus property. It's kind of decent. That the current owner already made a whole lot of renovation and change the roof, those major things. Um, and but the rent, maybe current rent is a little bit under uh under the market value, but it's not too far off. So there's not too much of things we can do to increase value. I mean, force the value. But then we're gonna look at the market pattern. And by looking at the previous slides chart, those red growth pattern, then we're gonna make the informed decision. So for pro forma, we're gonna not put like 5% up. It's gonna be unrealistic. But for comparison, I'm gonna do some simulation as well. Say, okay, if we put 4%, and then put like those normal time rent growth year-over-year change percent across the board, and we compare to the more realistic assumption, what gonna looks like. And for by the way, this is from the Samara spreadsheet model. And the Samara student may be familiar, but basically we have a part to put into performa the year one, and then year two, year three, year four through year six rent growth assumption. And then we can get the final estimation on the projected passive return. You can see that the left-hand side, I put more like a realistic assumption. Essentially, performance like close to zero, but I still put one here. One I think is achievable. And year two, one sort of conservative, and then year two, 2%, and then year four back to normal 4%, year five 4%, year six 4%. But aggressive one is 4% across the board. You see the sharp distinction. The difference is like more realistic case is only like 41%, 42% passive return, but more aggressive is like almost 100%. Okay, this is more than double. Okay, so let's go back to the starting point. Why? Why we need to look at this data? Why we want to analyze? So this actually is not big data, but it's the data and just simple summary. But give us the simple, like a really strong informed decision. Let's say, let's be real. Let's not jump in the steel with the right hand side assumption. This prevent me and my partner to blindly jumping in. And then if we jump in, then later we find that, oh, it cannot be achievable. Then okay, we screw, right? So this is another example of showing the why and showing how this data and analytic, the two piece together, kind of safeguard us from like doing crazy and stupid decision. So let me see. Originally, I planned to probably practice, have you practice something together by download this data set. But probably our time, maybe a bit of time. I give you some take-home practice. Okay, I actually saved those open source data to a documentation, a PDF, and show you at the end of presentation. And then you can take it home, you can access, and then download those kind of data set and then analyze the market you focus on, you're in, and then look at the rent curve, calculate the rent year-over-year curve, and tell the pattern. And hopefully you can take away something from today, this simple example. And then next, I'm gonna show you a more comprehensive example about data and analytics. It's more like the predictive analytics. But before that, let's do another quick pop quiz. Let's have some fun. So the pop quiz for this one is among the following metro area. Now it's metropolitan MSA area. Which area had the worst rent to price ratio year-over-year change percent on average during the normal time? Again, pre-COVID. This question essentially is asking, in terms of rent to price ratio, which metro area degrade worst, degrades the fastest, quickest during the past? So just make a guess. Oh.
The pop quiz is up, and so go ahead and select one of the options.
You're gonna be surprised to see something.
Among the following metro areas, which area had the worst rent to price ratio year-over-year change percent on average pre-COVID?
Yeah, for example, some area that I just make up a number. Some area, like for a given area, that like 5 years ago, the rent to price ratio in general, like median average, maybe like points is like 0.7%, and then now is maybe like 0.4%. It become worse. Some area maybe not change a whole lot. Some area maybe change really fast, which means aggregate really fast. That means their cash flow is going worse and worse. Some area cash flow maybe still similar to a few years ago. So just make a guess.
If everyone had a chance to select your answer, I will end the poll and show the results.
I think they already selected. Move on.
Okay, so probably, yeah, let's see. All right. So okay, some people select Georgia, Atlanta, and DFW. Some people say there's Ocala and then Orlando, Georgia, Savannah. Okay, let's see something. Okay, it's good to see some diversified information. That means you gotta look at the data. Here's the answer. Surprise! The first, just look at the first column first. The rent to price year-over-year change median sort of close to average. Ocala shows the largest negative number, which is the worst. Ocala, Florida, negative 4.3%. Is that this rent to price ratio degraded really fast. Why? Okay, for this metric, you might realize you actually need two things to calculate this metric. One is rent, right? Another is the housing price, the property price or property value. And then we already look at the rent pattern. We know that Ocala, you already know Ocala and actually a lot of these areas, rent growth is not bad pre-COVID. But if you look at housing price, this is crazy for Ocala. It's like 10% year-over-year change for housing price. It's almost double the speed of a rent growth year-over change in Ocala. And similarly, Lakeland is like, you see, these two are emerging market. They are rapidly growing. This emerging, rapidly growing market on the top of a fast growth list across the country, they all show this kind of a home price increase, the property asset price increase so fast. Similarly, you see Dallas 7.5 price year over change. Orlando, Tampa, they all kind of increase fast. That's why they have negative rental price year over change, meaning they degrade. But Georgia, Atlanta, Savannah, there you see their rent year-over-year change and then price year-over-year changes. They're sort of similar. So their rent to price ratio is not is close to zero. It's not like kind of stable pre-COVID. And Myrtle Beach similarly. So the rent to price ratio doesn't change up fast. So you see, in this example, we have two things to analyze. We have two factors to analyze to give the feeling of the market. And actually, in real estate investment, lots of people want to see multiple factors because to do the investment, they're gonna have like to judge many aspect, a cash flow, value appreciation, and for example, the Savannah, this area that if you search Google about their population pattern, it's gonna be kind of flat. They don't have population increase. It's kind of flat, and that's why the cash flow is good. That doesn't change a whole lot. That the price does not change a whole lot compared to the other metro area. And in real estate investment, a lot of things you need to analyze multiple factors. Here we have two factors. And in predictive analytic scenario, predictive analytic case, we need to analyze more factor. More factor could help predict what would likely happen in the future. So which made this kind of things, this kind of a job, whatever we call, fall into predictive analytic category because people want more crystal balls, but actually there's no crystal ball, right? So and I want to tell a story. Around the mid 2020, the housing demand remembers started to surging in the Sun Belt state, in particular Florida, Texas, and at that moment, I saw many YouTubers and a lot of organizations say housing market gonna be crashed in 2021. They're sending on 2022. They say, okay, next year gonna crash, and then after 2022, not crash it, and then on 2021, 2022, 2021, they say 2022 gonna crash, but 2022 didn't crash, and then in on 2022, they start saying 2023 gonna crash, and Fed start increasing rate during that time frame, and then they have some adjustment for some of the area, but it's not crash. So this kind of forecast can be played all day long, but a lot of people still in their mind have such kind of questions. Would housing market crash? Would OA happen again? Happen again and again? Or when it will crash? Essentially, want a crystal ball, but no crystal ball, right? So, well, no people can time the market, but based on predictive analytics with the right data, we can sort of forecast the near future pattern or trend using predictive models. based on important and relevant data. So here is the second example. I gonna show you. But before that, any questions so far? Anyone? So do you have been following me, or do you have some question mark? Then unmute yourself or type in the chat box. Let me pause here a little bit, because next one gonna be a bit more comprehensive.
Anyone's welcome to unmute themselves or post your question in the chat. If not, Albert, just keep moving. You're doing great.
All right, let's continue. Predictive model, predictive analytics. This is an example. This is a real example about Tampa housing price index forecasting. I built this model back to 2022, late 2022. What is predictive model first? A predictive model can be an empirical model or statistical model. This kind of a techie terms or whatever. Let me tell you more. No matter what type of model, it uses predictors or what we call influential factors to predict, to forecast. For example, some people might say, hey, look, the inventory skyrockets, so the price will drop. This is an empirical knowledge in people's mind. Hey, you see, the supply go up and the price is going to go down based on this common sense, right? So empirical knowledge, empirical model, whatever you call. Actually, when people saying this, people use some kind of mechanism in their mind. They already have some image about this relationship. So, and some people also may say unemployment rate is historical low. The Fed interest rate hiking will result in housing market price adjustment, but not crash. This statement kind of true. But again, the predictors are employment rate and interest rate. This is another empirical model in people's knowledge. Essentially, they build up something by seeing the information in the history and in their mind, and then they make judgment based on that. Or people could say the increased rate has cooled down the market so much. If the Fed shrinks its balance sheet, the outcome will be devastating. Again, this is another empirical knowledge, right? In this case, the predictor is the Fed prime rate and the balance sheet information. You see, all of this, when people saying something, they judge something, they try to predict something, they're actually using some kind of model. But no matter what model, there's a saying from a very famous statistician in the past. It's about all models are wrong, but some were useful. So we just try to use this useful part to help us build our informed decision, build our informed image for near future. So as typically a solid model, a predictive model, typically have multiple predictors, and different predictors have different weight and values. Those kind of a plus and minus weight, they add that together and give the final prediction value to predict the housing price for in this example. And so, and the predictor I consider for this specific example is population growth, income, median household income, the county's employment rate, mortgage rate, housing sales inventory, the Fed's balance sheet information. So some are long term, some are short term. Essentially, each of these predictor will capture some relationship with regard to the housing price. They can build up they can quantify the relationship and then generate those kind of a weight and then add that together. Let me show you one example about this predictor and how they quantify the relationship with regarding housing price. Here, probably you heard a lot of a YouTuber organization like, okay, you want to search, you want the search market, you want to analyze the market. The number one is like a population growth, right? Population, those strong population growth areas have strong appreciation on housing price. This is very common. And here also, this is my top one influential factor. On the left-hand side chart, you see on the top, I overlay the housing price index curve and the population curve together. In general, for many years, since 1980s to now, actually end of 2021, you see that generally both curves have this kind of increasing trend, right? Generally, for long term. But the housing price index curve, they kind of have some, variation in between. For example, the '08 recession, they have up and down, and then pre-COVID and then COVID, they have, different sloping, different steepness. Okay, then in addition to this population growth, something else is happening to influence the housing price. It's not just population. Okay, and I remember in previous slides I talked about there are some other factor I consider to analyze this to build this predictive model. And an employment rate is another factor. This factor is not like they influence the long term, they influence short term. You see on the bottom of the left-hand side chart, I overlaid the county, Hillsborough County's unemployment rate and the Tampa housing price curve together. And clearly, for some second, we can see the very, very, you know, obvious relationship negative. They are when unemployment rate skyrocket, for example, during '08, the housing price rapidly dropped. This kind of a negative reverse relationship. But on top of the population's growth, how much this impact going to be on the housing price from an employment rate? Then I use appropriate statistical approach method to quantify it. Then for any kind of this predictor, I can get those kind of codified the numbers, the relationship for each of the influential factor, and then create those weight. And then all together, they're gonna add that to some kind of model, total equation. Then I create this such forecast. So here, the forecast I created, the record I mentioned, I built this model back into 2022, late 2022, and I predicted from there, I forecast from there for 2023 and 2024. The left-hand side is more like the real estate, realistic scenario is more like what's gonna happen there. And then I forecast for the next 3 years from that moment. You can see that the dark color curve is the actual value, the actual housing price index. Is follow really well about the red color forecast curve. Is and at that moment I also kind of say, okay, in case like a economic recession happen, like the '08 crazy situation happen, what would be looks like? Then I play some gaming scenario and then say if that case happen, what the forecast can be give me the curve looks like, and then I have the worst case scenario on the right hand side, but the recession didn't happen, so the curve, the actual value follow really well along with the forecast curve. And you might notice there's like two dashed line for each of the chart. Those dashed line essentially is like forecast the upper bound and lower bound, the range of the housing price index could fall into. For example, for 2022, it could go as low as the lower bound dash line, it could be flattened out, or as high as the upper bound dash, it could be like more steeper sloping. But most of the time, people use the middle line, the solid red color line to forecast, which is
I
like
have a question.
more
What is the
static growth, which means,
I have a
okay,
question.
after this kind of a pandemic and then the Fed rate influence after this kind of a lot of things going on, then the market
Right.
kind of turn back to normal with a steady pace. It's not like crazy anymore, but it can still increase steadily with the current this kind of a forecast.
So
So
I
yeah,
have a
this is a
question about the red line for the Tampa housing of realistic scenario. Okay. So what is the red line? Where are you getting a data for the solid red line, which is say forecast value, smooth it? Yeah. Because I understand 95% plus minus confidence, negative and positive, but where are you getting this data for forecast value, the
Oh,
solid one?
the solid one is generated by the model. And remember, we have a set. I have a several predictors, right? I have a several influential factor, and each several influential factor, I have a forecast value, and then they put together, they generate this final forecast value for housing price index. Does
Okay.
that answer your question?
And the black, yeah, and the black one is actually the actual data.
Right, the actual data and the
Okay, I
actual
got it.
data. Got it.
I got it. Yeah. So
Go. Yeah,
you have a average and you plus minus 50 to 95% confidence you're taking on that.
right. Yeah,
Okay.
yeah. Got it. Cool.
Albert, we have another question in the chat.
Okay, let's see.
Someone asks,
Okay.
how about creating LLM model using house data to generate predictions using AI?
Yeah, there definitely there's like a tons of model, like tons of algorithm. Yeah, we can do like those modern world machine learning model, or like deep learning, those kind of a more like a in compares in contrast to the traditional regression. Here is the really technical scale I use is a regression model, regression and time series. But we can definitely use more like AI, like deep learning, machine learning model, random forest, gradient boosting, whatever those kind of model. But here's the things. No matter what we do, we algorithm we use, we yeah we can isolate the correct relationship for each of the factors, and no matter from long term and short term, yeah, and do the forecasting. Definitely, um, more way can be used to generate this kind of forecasting, maybe even more accurate. But so far, this kind of a forecasting accuracy is good enough,
Yep.
and more use case can be applied. Now, for example, housing price, and we can apply to the rent growth as well, and we can apply to any kind of metric that is important to a deal or to the market. So does that answer this question?
So do you have any template for that?
Unfortunately, oh, this is a good question actually. Unfortunately, there's no like handy template for this specific example. This is a very comprehensive use case and needs like years of like knowledge and experience on statistical programming, statistical knowledge, very professional analytic and advanced analytic skill. So this is not like a simple example as the one I showed earlier. Earlier, you probably can do it just in Excel, but this one it usually needs statistical programming tool. For example, Python, R, whatever. So this kind of a language and the skills. And usually this kind of thing is relies on like a very professional analytic consulting. So and regarding that, okay, I can reach this slide. I summarized the list of the open source data and tools into a PDF document. I can send to you. You can and Michelle, my assistant, can type in the chat box about my contact, and you can book a call with me for a call or meet up if you need certain help on this kind of things. I can provide analytic consulting service for those very comprehensive analysis and request. But this thing is not easy, so we can talk in more detail. For the I yeah for example, your take home take home practice after the first example, that the one I show. Yeah, you can practice that one. That would usually easily without professional statistical or analytical background. You can do that, and you can book call. And I can teach you a little bit. For this kind of things, very comprehensive without professional education and training, like from university, is really hard. So this is a field called data scientist. So you usually in years of practice should be able to do that. But yeah, I'm open to book a phone call and then have any further detailed discussion. Um, so Asif,
Thank you,
is that you
Albert.
asking?
Yes, thank you very much.
Okay.
I got the answer.
Anyone else want to post your questions in the chat or come off of mute and share your questions? Albert would be happy, and I would be happy to answer any questions. In the meantime, I'll go over just a few things that Albert covered. He also has a YouTube channel, if you didn't catch that. So look him up on YouTube. And all the free public information that he shared with us. It's very useful. Examples in the insurance industries and other industries like the rental truck moving companies, they have open source data that we use when analyzing who's moving into cities and all that. All the rent growth, interesting things. And thank you so much, Albert, for sharing with us today. I can tell you're good. You're amazing at what you do. So anyone feel free to ask questions. We have just a few minutes here and then we'll wrap it up for today.
Yeah. Yeah, again, thanks for Herb's invite. And hopefully the things I go through today is not too hard to follow. I know that if people is not from this field, like analytics field, it could be hard to follow. But hopefully the outcome of today is not like that. Hopefully everyone can enjoy a little bit. Okay, I saw another one. What are the list of the use what are the list of a use case from your big data and analysis? Um, I have generally, if you look at my YouTube channel, probably you have some feeling. Basically, I have done a lot of market analysis. Like, for example, searching what kind of market worth to investing, and also kind of a project how's the market and gonna be looks like. For example, the Tampa housing price analytic, or analyze for example, to get the relationship about what the factor between rent and the factor that could influence rent, and underwriting. A lot of cases, just all surrounding about the real estate investment. So, does that answer your questions? But definitely, there are more specific use case could be reviewed based on what specific problem people or myself try to achieve, try to solve. Answer your question? Does it answer your question?
Yeah, we want our property, our apartments, when we purchase apartments, we want our apartments to be the most likely to succeed, right? To be profitable, right? To be in a great neighborhood where we can build it up and make a better community for our tenants and a better return for our investors. So that's a big point on this data. That's why we
Yeah.
use this data.
Yeah, again, I want to emphasize a little bit today, the use case or the list of use case I answered to Jeff Zhang's question is for surrounding real estate, no matter like the residential or apartment or the CREs category. But definitely the data and analytic apply to more industry outside of real estate, which has been served a long time for the employers I have worked for so far. So, but it's not just restrict to real estate. But what I'm focusing today is real estate. So this and it's all our common interest topic today. So just want to clarify.
All righty. So you can reach this recording on YouTube at Eagle City Multifamily. Just search Eagle City Multifamily on YouTube, and you can see this video once it goes live. Typically tomorrow morning it'll be live. if we have slow uploads, it may be the following day until this is uploaded. You can also see this video, this recording on Eagle City Multifamily Facebook page. It's live, it's already posted. So if you want to go back and look at anything, you're definitely welcome to. Please reach out to us as well at eaglecitymultifamily.com, the website, and be happy to talk. So with that, we will wrap this up, and thank you so much